This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Managed money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Friday, August 29th, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Quickly here, overnight markets had December corn up 2 at 4.12. November soybeans were down 3 1/4 at 10.44 3/4. And December Chicago wheat was down 3/4 at 5.28 1/4. No export sales announcements out here this morning. We did get core inflation numbers here this morning. It was up 0.1% from June. Currently at 2.9%. Those numbers were as expected. Stock market broke a little bit, down 95 here as we start the morning. I guess what we know, we've obviously gotten through first notice day here. We're into deliveries. I know we'll touch on that. We had some real small deliveries overnight in a number of different markets here. And then, we continue to hear that the Chinese delegation is in Washington meeting with the U.S. trade team. So, we'll see if anything substantial comes out in the way of a path forward there. So I guess with that, guys, Justin, maybe touch on some of these light deliveries we saw overnight. What your thoughts are as we wrap the week, and then we'll throw around the room.
Yeah, I mean, we had that kind of break from Mondays, or I guess Sunday night's open, right into yesterday morning. So we had a roughly 13 cent break, and then we ran into pretty good buying, closed higher. I think there was several people waiting for a first notice day break to buy in corn. So we saw that beans recovered well as well. So I was talking before the show. A lot of times you get a rally into first notice day, it's a fade. If you get a big break right into first notice day, it's a fade. I'm not sure what we just had. We kind of had a rally and a break right into first notice day and a rally again. So light deliveries doesn't, not surprising considering how wide spreads are. Doesn't make a ton of sense to deliver anything really. Maybe meal might have been a little surprising because we got, we inverted the meal market. We talked about this on the show a few days ago, but had a huge rally in meal spreads. Went from a big carry to a decent size inverse. No deliveries there. So overall, pretty friendly on that front. Kind of like to see how we settle today, and then what the attitude is. As you got through first notice day, what the attitude is next week coming in. So you've got the next WASDE report, September 12th. So I don't think you're going to have, a major move going into that. I think there's probably going to be support on breaks until we see, with people talking about the yields are going to come down. I think there's going to be some buyers as we go into that report, and then see what the numbers say. And then now we're starting to get actual data, some harvest data. So we've got, guys called Central Illinois and South that are starting to roll pretty good. So as we start getting actual data, I think the market will trade that. I just not much from what we've been changed from what we've been talking about. I think now it's just kind of positioning and seeing what people want to do here. I do think we run into big rallies above here in corn. We're going to run into plenty of selling. I think, call it 420 and above in D's corn. I think there's going to be a lot of offers there. And towards the recent lows, there'll be some good buying. So I could see kind of a choppy sideways thing until we get a good feel on yield. I mean, you've got a wide range of what people are trading on yields, both for corn and beans, I think. Mm-hmm. Obviously, I think we rode off, or the market in general rode off the 188, 189 USDA yield with Pro Farmer coming out. So, there's going to be people there's probably a 10 bushel range on what the market's kind of trading or thinking right now on yields. And until we get some real data it's going to be hard to argue too hard one way or the other. And then beans, I think, is also a pretty big wild card. Big pod counts, obviously, but if you don't rain, it doesn't matter. We got some good rains out west. The east has been super dry. You know, what does that mean on a national level? Can we beat the record yield by a couple of bushels with as much dryness as we had in the east? I'm not sure. You know, is the west big enough to offset all that? I mean, time will tell, but that's kind of the thing. And the other thing I would point, and Dustin did a good job in the letter, kind of two totally different markets where you've got really big supply and really big demand in corn. We're the second highest export bookings that we've had, and we're really close to catching that. And that was when China purchased a ton of corn several years ago. So outside of that, you know, giant purchases were kind of blowing away all other years. So huge corn demand. Beans are the opposite. Zero on the books for China. We talked about that a lot. With really low acres, yield in question marks. So we're kind of stuck in this. Both markets feel like they're just kind of stuck here waiting for some news here. I mean, if China talks completely blow apart, it's probably bearish beans just because so much is relying on exports right now. If corn yield, and conversely, if we do a deal, I mean, beans are going to look overly tight at these prices. So I get why the market's choppy. It's just too hard to have a really strong conviction here because there's a couple different factors at play here.
So what's your opinion fundamentally, Justin? I mean, do cool nights and kind of the cooler temperatures outweigh the lack of rain that we've got for the next 2 weeks as you look at weather? Because, I mean, it's fairly dry across the majority of the belt for the next 2.5 weeks.
My personal opinion is I think corn will fare better. You know, I think like I'll take ours, our corn's filling out well. I think the cool temperatures have really helped just the stage that the corn's in compared to beans. I think beans are going to struggle more than we think. We'll see. These areas that haven't rained for 30 days, I think the bean yields could be down quite a bit in those areas. But again, I mean, the really big pod counts, out west, north and west, I mean, they have gotten some rains. They had good water profile going into it. And the cooler, if it had been mid 80s, I think these markets would be, especially the bean market would be, really catching a bid here, but it's cool. I think it's just hard for people to figure out we always have a hard time with bean yields anyway. So I think it's really hard to see to have a good opinion on what that is. I personally think the numbers that we've written down will be hard to hit, but again, I could be underestimating the Western belt. I just don't know.
Sure. You think Northern Illinois starts rolling on corn maybe 2.5 weeks or so? Is that what you're hearing? Yeah. I think, mid-sep, so by, for 2 weeks, I'd say. A couple weeks. Good.
Yeah.
Ben, what's on your mind this morning? I thought you made a great point here just in terms of where corn is at relative to a month ago. I thought that was pretty fascinating. So maybe take our folks through it a little bit.
Yeah, if you look at corn, I'll start with weeklies first. Last week's weekly high was 413 3/4, and we closed at 411 1/2. We're going to go into the opening around 412. On the longer term stuff, on the monthlies, last month at the end of July, we closed at 413 3/4. So we're sitting here going into a 3-day weekend. It's always worth noting if we were to be close higher this week, it would be the third week in a row. It doesn't seem like it because the markets have been kind of a grind and quiet. And if you can get the higher monthly close, that would be the first one that we've had since April. So it's always worth watching, going into a 3-day weekend, tend to have some little bit of turns into these things and just waiting to see how we close and how we trade into Tuesday's close, Wednesday's close and see, I agree with Justin. I think corn is going to find buyers on breaks. I think it's going to find ample selling on rallies. Ultimately, you've got to really get this thing going. You've got to spook end users and get managed money to to exit their position. I don't know that, you know, it's kind of an automated trade for managed money. When it's time to go, it's time to go. Excuse me. They're not necessarily trying to pick a bottom or sell a top when they're putting on positions. It's months and months of them, you know, building positions. And then you look forward to the end of September, which is the end of the quarter. So, you know, I'm open to 20 lower and 20 higher from here, I guess.
Very good. Let's move over here quickly into livestock. Rye, interesting, man. The cash index rallying $15 in the final week of expiration is just insane. And
Right.
the other thing I saw this morning, you know, on the hog side is that we keep open interest is popping as we've been rallying. So there's obviously, you know, new participants coming in into the hog market. So I guess share your thoughts here as we wrap the week.
Yeah, I mean, we had a little bit of a minor setback yesterday, but didn't really test any major moving averages, anything like that. Didn't even see any liquidation. Open interest was actually up like 2,000 contracts. So maybe those are new shorts, but generally speaking, all these little dips have been kind of buying opportunities. We did see a little bit of shaky cash trade yesterday. I mean, we're still higher in the south though at 242 in Texas and Kansas, but a little bit easier in the north. So I mean, it does kind of feel like you've reached this point in futures where sure we could top at any possible second, but we're just not seeing big changes on the fundamental side of things. I mean, maybe next week, you know, after next week, we start to see a little bit of a back off seasonally in demand. But I mean, at this point, you got new highs in choice at 414.41. I mean, you were up over $2 yesterday. Select was down a little bit. So I think there is a lot of more kind of headline optimism from a potential China trade deal, but you know, I think that more is kind of yet to be seen overall. You know, we'll just kind of trade it as it goes. But yeah, I mean, you know, at this point, you could probably knock off $10 and still not really change the trend in feeders or live cattle right now. So as long as the fundamentals are holding up, as cash stays firm, you know, it doesn't really seem like we're going to see any major setback. I think the market's really going to be hyper focused on open interest and the kind of commitment that we see. If we start seeing big liquidation, I think you're going to get a lot of people really trying to call for tops, really trying to chase the market, you know, a lot more aggressively than they have been, just because being long has been the right trade so far. And on the hog side of things, same thing. Like we've seen this big jump just in the past past week. And I think overall you've seen the basis really tighten up just between where cash is, where October is. So I think that's kind of been leading the trade. I mean, cash has been just kind of steady firm this week, about 108, down a little bit yesterday. Saw carcass down a little bit yesterday, but once again, I think there is just a little bit more optimism that we're seeing good demand. Mexico is really strong on the weekly exports, and there could be some China news out this weekend that shakes things up. So just kind of feels like everything's kind of friendly going into next week as well, but we'll see if seasonally things start to back off. So all eyes are going to be on cutout, you know, and cash for the next week.
Hey, Ryland, I got a question for you. I know we're getting Fun Fact Friday, so apologize.
Yeah.
But just as very anecdotal, but it seems to me like since, you know, say COVID, you know, all the steakhouses, I mean, now we're in suburbs, so, you know, a lot of people like to go out to dinner, but they've really opened up. I mean, you used to be able to not get in, you know, even on a Monday or Tuesday. I mean, as far as demand's concerned at these prices, are you seeing that start to shut down a little bit, or are people just buying their own meat and cooking at home?
Well, I mean, that's the thing is like we really aren't seeing a big change in just overall demand on the retail side, but then you've got Walmart and McDonald's saying that like their sales are taking a hit. You've got Tyson saying their profits are getting hurt. So like I think there is a price that, you know, really can shut demand down, but like these small incremental changes, the consumer will typically adapt to. I mean, obviously, if you're going to a steakhouse, you're expecting the highest of quality, dry aged meat. I mean, like you're going to pay $70-$80 a steak right now, and it's almost like the higher price you pay, the better you think the steak's going to be. So I don't know if it's a psychological thing or not, but I mean, McDonald's made some comments that they are seeing things slow down a little bit on the burger side with the higher prices. I think that's natural, but I mean, generally speaking, the packer really hasn't. I mean, the demand for cattle in itself has not really slowed down. We saw the kills really starting to pick up. So I mean, we are coming out of the peak seasonal demand time, which is grilling season. But at this point, the amount of cattle that are in the U.S. are some of the tightest we've seen in half a century. So I mean, like, you can't really shut down the demand for cattle right now from anybody that's got to process these animals and turn them into beef. So the price on the street, I don't think is shutting anything down yet. If it doubles, maybe. I mean, obviously volume's probably going to get hurt if prices just keep on rising. But the features are really, I think, what keep people interested, right? I mean, you'll see ground beef on sale, fillets on sale, versus other cuts. So there's always going to be this shift in seasonal demand, and I think margins get made up on certain cuts at certain times of year. So as of right now, it doesn't look like it's really backed off at all.
Yep.
Oh, very good. Appreciate the insight there, Rye. Everybody's favorite time of the week here. Brian's Fun Fact Friday. What do you got for us, Brian?
Thanks, Dan. Happy Friday, everybody. We made it, and happy start to the holiday Labor Day weekend, the unofficial end of summer, and as Ryland likes to always remind us, the end of grilling season. So here are some of the crazy financials for the Labor Day weekend ahead of us. $1.5 billion will be spent traveling. Gasoline prices are at their highs, so that is a lot of money going just traveling to the lake house. $1 billion is spent on beer and alcohol, which makes Labor Day weekend the drunkest of the year. As I mentioned before, 7 billion hot dogs will have been consumed from Memorial Day to Labor Day, and Labor Day alone consists of hundreds of millions of hot dogs consumed. And as this weekend approaches, for some reason, this is the weekend when everyone wants to buy a new mattress. They spent $500 million to hopefully sleep better. So with that, I'm going to all serenade you with my ode to Labor Day. All right, here goes nothing. All right. Oh, Labor Day, you sneaky charmer. 3 days of freedom, burgers and armor. Grilled tongs held high, we wield our might over charcoal kingdoms glowing bright. The sausages sizzle, the steaks have flair, a beer in hand, wind in our hair. We laugh at smoke alarms, we dance with flames, masters of marinades, kings of last names. Yet, alas, the calendar smirks at our pride. The end of grilling season now casts its tide. The coals grow cold, the spatulas rest. We mourn our mustard-stained, sauce-dripping quest. But fear not, brothers of beef and beer, for memories linger, grilled ribs and cheer. We'll stoke up the embers next spring with delight. Until then, dreams of Labor Day bites. So raise your tongs, toast one last brat, and laugh at summer gone just like that. For even in sweaters with burgers now few, the spirit of the grill lives on in you.
Oh, that's
you like
powerful.
that?
That's great.
So happy Labor Day, everybody. And as I mentioned last Friday, Jack is going to kickstart our Labor Day weekend here and show all our viewers his Malort face.
Oof.
Oh, you're muted.
You're muted. Oh, got him.
You're muted.
Wow, you are absolutely muted. You have no audio. Okay.
You have no audio, so I think just drink.
Yeah, now you got to just drink.
Ben, can you unmute Jack?
Oh, God. Oh, jeez.
Oh,
8:30 in the morning.
Wow.
Jeez.
Okay.
There we go. It started.
It's against company policy.
Yeah, wow.
Maybe that wasn't real, Malort.
Yeah, I don't think so. I think that was apple juice.
Oh,
Yeah.
God.
Anything would have been better.
Oh, I just got the chills. Okay. Well, thanks for that, Brian. Very good. One thing to note, we will be closed Monday. Markets will be closed on Monday, so there'll be no war room. Markets will reopen Monday night, 7:00 Central. So we will be back with war room there on Tuesday morning. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing it live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Hope everybody has a great holiday weekend. Guess markets are open. Let's get a quick rundown here. D's corn's up 2 3/4, 412 3/4. November beans are down 3.5 at 1044.5, and December Chicago wheat's up 1/4 at 529.25. So again, hope everybody has a safe and happy Labor Day weekend, and we look forward to talking to you again next week.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.